So I got tied up yesterday, obviously. I wasn't able to get on YouTube with anything, but I did an execution, shared it on Twitter. The link for that trade example will be in the comment section of this video. All right, so let's go briefly through. I don't want to spend too much time on this one because I have to hit the road. So dollar index is our weekly chart. Obviously, I mentioned in the commentary on Wednesday that unless we take out that low and trade into this inefficiency one more time, I was going to hold on to a bullish bias for dollar and bearish bias for euro, trying not to pick tops and bottoms on a higher time frame chart. So you can see the market did in fact aggressively move towards that low. No problem. I stated very plainly in Wednesday's video that I'm not trading Forex. I'm not interested, but gun to my head, I always try to sit down and share with the viewers and my students what my opinion is on the market at the very moment that the charts are being shared with you. Okay, it's a wonderful illustration of seeing me outline something from an opinionated position and admitting up front that I wasn't going to be doing anything with the information regardless anyway. But I want to kind of put some tent posts down so that way you can get comfortable, warm up to the idea of not having to be right. Okay. Usually the skeptics of me and my work, they'll say, well, look, see, he said that and it didn't do that. Look at that. We're going to kind of like make sure you understand in the proper context, because I do lots of video work. I do lots of audio clips and things that people can listen to on Twitter and on this YouTube channel. And it's very easy to take something I say out of context and make an idea or an argument about it. Okay, set up straw man arguments. And I'm not here to try to make myself look like I'm always right. In fact, I was kind of hoping that the dollar index and the euro dollar would do something contrary. So that way it sets the precedence going forward that you don't have to be perfect. And you can be right sometimes, but still be profitable. You can be incorrect sometimes and still be profitable. So that means being profitable when you're wrong. And I'm going to kind of teach that as I go through this. So the dollar index on Wednesday, I mentioned that I would hold on to a bullish stance on dollar unless we take out that low and trade into this inefficiency. Now, if we trade down below it and come back up, I would expect it to be treated as resistance. And then that would set the stage for a run into these lows. But I have to see if we'll do that, obviously. At the time of this recording, it's about 11 o'clock or so in my local area here on the East Coast of the U.S. and on Friday. So this is representing not Friday's data, but this is Thursday's. So I took the screenshot at this time on Thursday. And the daily chart will be representing that as well. So all of this is Thursday's time. So this presentation will encapsulate Thursday and then partial Friday's action. And I have to hit the road, so I won't be able to do anything as a final review. So we have a breaker here on the daily chart. We have high, low, higher high, down close candle on here with the lowest close. Notice I'm not using this one. I'm using the lowest close. The volume, the narrative, the storyline is inside the bodies. The wicks do the damage. So you take that range, expand it to the right, and that would be your breaker. And I'm calling this a weekly breaker, but it's inside of this range here. So I'm zeroing in on the daily chart to get inside of what this would be over the course of more than 1 week, obviously. But I'm looking at that daily candle right there. So from a weekly perspective, but not leaning on the weekly chart, but that specific candle right there is what I'm aiming at and drawing it out in time. And I mentioned how we worked inside these levels here, the weekly mean threshold of the bearish order block, that's this level here, 104.54. I mentioned the daily order block opening price here. So it was lots of work on that level. And then ultimately, we did in fact trade down here. I want you to think about, if you're hanging on every word and syllable that I say, where I stated that I'm going to hold on to a bullish bias for dollar unless it takes out that low. Now, what I'm suggesting, if you listen to that Wednesday analysis, I'm stating that I was not interested in taking any trades. I'm sitting still. I'm neutral. I made a very clear statement that I am neutral. That means I'm taking no trades. I'm going to wait and see what the market tells me. So it was kind of like teaching whenever I give something out in terms of analysis, or I call a move and it happens, there's a group of individuals that follow me. They're immediately responding with, okay, now what's it going to do? Now what's next? Because they want to see the next magic trick. And I'm trying to settle those expectations down in all of you, even for the folks that don't reach out to me, but you're probably thinking it. Okay, he got that right. So now what's he going to call next? So it's not that I'm trying to entertain you. I'm not trying to dazzle you with being correct. I'm trying to teach you how to manage yourself, because come November, when I'm no longer doing this with you all, it'll be up to you to stick to what you've understood and learned as rule-based ideas. So what I was saying is I'm interested in staying bullish on dollar, bearish on euro dollar, as long as we stay above this low. If I'm neutral, I'm looking to take no trades. But if it does trade down here, then that opens the door for me potentially conceding and saying, okay, this is probably much more meaningful. And if we come down below this inefficiency, I'm going to see it be treated as resistance. And then any subsequent premium array that would set up a later, like a fair value gap, something to that effect, or bearish order block, maybe a breaker, that could act as some premium array to send us into this area here. So it's kind of like my intermusing, the thing I'm considering as a potential future setup, but I can't do anything now because we're going into Friday, and I won't be in front of the charts on Monday either. So I'll be back in the swing of things next Tuesday. So here is the hourly chart here. We gapped down on Thursday when we saw trading begin again, and we ran quickly down into that low and then into this low here. So clearing up all the sell side resting here, we aimed into that. And now we have, in my mind, potentially shifted bearish. Now, I'm not convinced entirely. I want to see more evidence on that daily chart and get below this inefficiency and treat it as resistance. Okay, so I'm waiting. I'm predicting that as a future possibility in price action, that I'll look for setups if it does that. So it's an if-then clause. Okay, in itself, it's algorithmic. If the market will do this, then I will do that. But I'm predicting, I'm not reacting, I'm predicting that it will use this inefficiency that's shaded here as a potential area of resistance and treat it as a premium array. And then look for that lower daily relative equal low where sell side would be residing. So it's a condition for me to allow myself to sit still and relax and not rush to get into another new trade idea, which many of you need that skill set. All right, euro dollar. Again, this is representing where we were at the time on Thursday at this screenshot. So we worked inside this order block here, and it's a weekly chart. So there really isn't any inefficiency in this until we get up to here. So if we see that further breakdown on dollar, this will be the point of interest I would have on a longer term for euro dollar, unless this low is taken out. If euro takes this low out, then we resume looking for these lows to be taken. Okay, so based on what we saw on dollar index on Wednesday's analysis, I said that if we saw that low taken out on the daily for dollar index, then I would push my near-term bullishness on dollar to the back burner, waiting for more developing conditions, potentially setting up shorting ideas for dollar, which would allow for upside on euro. Now, let's just say, for sake of argument, say it trades higher and we get above this and treats it as support. That could be the catalyst to send us up into this volume imbalance that never got traded to. Okay, so we could see a 1, 2, 3 dries pattern that would eventually, much later in the year, become a factor. Okay, so I'm just giving you some forecasting. I'm not stating that that's the ironclad gospel that's going to absolutely unfold. It's just these are some of the ideas when I look at this chart. That's what I think. This is a weekly chart, so it takes some time for those things to develop. All right, here is the daily chart of euro, and we were meandering around in here. I said I would stick with the idea that we'll see if it wants to go lower with higher dollar, and the higher dollar did not manifest itself. And I said I wasn't sure if we go lower, if it needs to take out this high first. I didn't know. So I was neutral. I was waiting for more information. It did in fact do that. Now, this is where critics, people that don't agree with what I'm stating, or just simply don't like the fact that you all like listening to it and trading and finding profitability in it, they'll cherry pick the things I say and take them out of context and say, well, he said it was going to do this and it didn't do that. What I stated was I was neutral on Wednesday. It means I'm not taking any trades in Forex. I'm not using the dollar to trade. I don't trade the dollar. I use it as a barometer for risk on, risk off. But index futures can sometimes fly in the face of what the dollar index is doing. So I'm a little bit more flexible when it comes to index trading. But in Forex, it's almost ironclad. Okay, if the dollar is going to decline harshly, that decline in the dollar would open the doors for a rally in euro, cable, pound dollar, Aussie dollar, those types of currencies. So we didn't see, in fact, the run up in here, took out that high, but we're still inside this order block. So that's what I'm saying. I'm reserving my verdict on what this is going to do until we get into trading. So when I get back from our road trip here on the weekend, I'll see how we close on Monday's trading, and then I'll give you some kind of commentary probably on Monday evening on the YouTube channel. All right, so here is where we take the context and apply it to the real mechanics of trading. There's nothing wrong with having an expectation and analysis. Like before you sit down and go to bed, you look at the charts and you think, okay, well, this looks like it may do this or that. So you're predicting, you're doing your analysis, you're looking for a setup or a condition in the marketplace. If it meets that condition, then you'll assume a trade position, okay, or incur risk. When I stated on Wednesday that I was neutral, that means that I have no interest in taking a trade. And even if I didn't say that, let's just take that out of the expression and say that it was you, or I'll just stay on the hot seat. ICT said that he wanted to see Eurodollar go lower. Okay, take out the truth and the fact that I said I wasn't doing anything with it. If I'm stating that I want to see the Eurodollar or any market to set up a situation where we can be going short on it, if the market doesn't present the conditions for that short to manifest itself, there is no reason to be upset. There's no reason to point fingers and say, ha ha, you got it wrong, or me, ha ha, ICT got it wrong. Getting it wrong would be getting into a trade that would be a failure and stopped, and with a loss. Okay, there is no setup in here that gives the expectation with time. So that means the time of the day that we will be taking a trade, which would be what? Eurodollar could be traded in the London Open. It could be traded in the New York Open and or London Close. There it is. That's the times I'd be interested in even conferring with Eurodollar. We had these relative equal lows here that I was trying to aim for. Did this market show any displacement lower after Wednesday's commentary? Did it displace lower, create a fair value gap to trade back up into, and then go short for that? Be honest now. Did it form? No. The only thing it did was roll right up out of that, came back down, found some support inside of this imbalance, which I'm sleeping at the time. I'm not watching it. And it rallies up, attacks this high. Mean threshold of the 60-minute fair value gap over here. It consolidates around that, then expands up and attacks the buy side here. So profitable in the sense that there was no monetary loss, but wrong. Wrong in expectation, and no ego bruise, no pride harmed, because there was no setup that failed. No setup manifested itself. So that's what generally the skeptics do outside of our community. They'll point fingers and say, ICT said this and it didn't do that. Hoping, because in your ignorance and very limited understanding of what it is that I'm teaching, you'll see that and say, oh yeah, it doesn't work, or he doesn't know how to trade, or he can't read price, or he doesn't know how to do anything right. It's someone that is trying to capitalize on a viewing section of our audience that doesn't know enough to know better. Okay, so there is no setup in here that set up a displacement, trade back up into a fair value gap, and then run the liquidity here, here, and potentially over into this low. But I didn't call that low. I called this area of interest right below that low here. At the time on Wednesday's commentary, this little logo was just inside this area with the amount of data I had on the chart. Okay, so it didn't manifest any kind of losing trade. What we want to see form that gives us the framework for the trade has to be there in price. If it doesn't manifest or make itself present in price action, there's nothing to do. There was no losing trade. There was no missed opportunity for a short because it just simply didn't manifest. It went the other direction. No problem. You're going to have that. Okay. You're going to have that occur with you in your own analysis, your own trading. And you can sit around and beat yourself up and say, oh, I should have did this. I should have did that. Or you can say, okay, well, I'm glad that my system, my method, my conceptual ideas about how I'm reading and engaging price action kept me from taking a loss. Even though it didn't give me the opportunity I wanted to pursue and participate in, I was not able to incur a loss. And there's no ego harm there. There's no pride there. It's flexibility. You have to be flexible as an analyst. The market's going to do certain things sometimes that you just don't anticipate. And you're going to get that part of it wrong. But the beauty is of not fearing that. Because if you understand what I'm teaching you, my concepts, my setups, when they form, they're actionable. But if they're not presenting the framework, then chances are the likelihood of you having a loss is reduced. Whereas if you just go out there and trade on indicators, or if you trade on some willy-nilly idea or some black box idea where it just constantly keeps throwing ideas that it's a buy, it's a sell, it's, from my perspective, that's, complete randomness. And you're going to be more prone to being victimized through that randomness. Whereas we rely on price action to show us something to work with. And at the time of that Wednesday analysis and commentary, we didn't see any displacement lower afterwards. So there's nothing to engage here. There's no short that failed. There's no short that manifested itself. So that way you understand the proper context. It's not me trying to save face and look smart and say, I got it wrong, so let me get up here and pretend to give you a narrative so you don't pay attention to it. No, I want you to pay attention to the fact that I called that to go lower into these levels. Because a gun to my head, I had to share my opinion. It's easy for someone to sit on the sideline and say, he says buy and sell, and when one works, he comes back and says, sometimes there isn't a very clear expectation from the time I'm sitting in front of the charts and talking to you. And I made that very plain when I said I was neutral. But gun to my head, that means I have to give you my opinion right then and there. I would prefer to see the market run these lows, this low, and maybe get into this area here. Okay, that's wonderful. But did it give us anything to act on? No. So there's no reason to be upset about it. There's no reason to point fingers and say the concepts don't work, or I can't trade, or it's a scam. Okay, it just means that you are learning how to navigate. Navigating price like this is what you're going to have to do. Every other system, every other educator, every other trader has these environments where they go and they expect to see something. They really want to see something form in price, and if it does, they will trade that. They're predicting price. But that setup might not manifest for them. And they either have to adapt in reverse or do nothing. Well, I was sleeping where all this was going on. So it had already ran up into this area here when I woke up. So Thursday, it was like, okay, well, there it is. I mean, so it's already moved. I'm not ashamed of that. My focus was and has been on index futures. So a 15-minute time frame, you can see here, that gap on the hourly chart. Let me kick back up into it before we see that. That's this right here. Okay, that buy side imbalance, sell side inefficiency. It's a fair value gap. The market trades back down into here and into that shaded area, which is a fair value gap in itself. And we'll look at now the 15-minute time frame. You can see it trading down into it here. That's the London session. That's London open kill zone. So there's your trade. It's a Judas swing, and it rallies up. Admittedly, if I had saw this like this prior to London, I still wouldn't have traded because I'm not trying to trade Forex right now. But I would have anticipated a run into this area, and how we traded at the order block here. That would have been, in my mind, much more impactful. So we had a down close candle there. We rallied above it and traded down into that mean threshold. of this down close candle that you're seeing here. That right there, that's a trade I would have taken. I would have taken that, but by the time I sat and looked at the charts, it already moved too much and I'm not interested. But we have an immediate rebalance there, and we have an immediate rebalance there. So when you see those are signatures that tell you that the market's going to want to quickly get to some level of liquidity or inefficiency. And the old high on the hourly chart was here, so it drove up into that rather handsomely. All right, E-mini S&P, our weekly chart, you can see we did in fact trade higher on that weekly gap, and buy side resides here, and outside that we have this volume of balance as well. NASDAQ, I showed you on Wednesday, I believe, if my memory serves me correct. NASDAQ has already traded up into its secondary volume of balance, but the S&P has yet to even take this high out, let alone get up into here. So S&P, unless it completely crashes, we're going to maintain expectation that we're going to look for this high to be traded up into. And on E-mini S&P daily chart here, you can see that we had this buy side of balance, sell side inefficiency. We traded down into that. I mentioned that it was likely to do something to this effect where we would trade down and then run higher. And we did, in fact, take out those relative equal highs. Let's drop into a hourly chart. And you'll remember this. At the time of this recording, I sent out a tweet on my Twitter account taking you to a YouTube link that takes you to the 24-minute and 5-second mark of Wednesday's commentary, where I go into this hourly chart and I say, okay, I'm taking your attention into this wick right here in the midpoint of that, which is consequent encroachment. And I say, let's play devil's advocate. Let's assume for the moment that the S&P wants to go higher. If you hold that bias, remember I was saying on Wednesday I was neutral. So I was giving you an actionable plan of study so that we can go forward, okay? Not just say, well, the market could go up here or the market could go down here. Because if you just listen to Wednesday's video and commentary and you walk away thinking that, you didn't pay attention. You have to listen to what I'm suggesting to you, because if you are following this market and your bias or your belief is that it's going to go higher, I told you how to engage that. And it was at that 24-minute and 5-second time. And it's this wick right here. Midpoint of that, folks, this does not appear in textbooks. Okay, it will now, because everybody's going to start writing books on Amazon and everything else. And it's going to be in mentorships now because you watched it pan out. But there's still some things that you need to know. You just can't look at every wick. The question is going to be, how do I pick that wick, right? Well, below this consolidation, and this was that weekly gap low, and this is the weekly gap high, and I mentioned that there was buy side relative equal highs. There's buy stops resting right up here. And I stated that I don't like that. Retail sees that as resistance. I never liked that. And that's what I said in Wednesday's commentary. I stated that smooth edges like to be made jagged. Okay, it's an expression I've used in a number of years, and this smooth area will be made jagged, and we've seen that today on Friday. This is where I took the screenshot at 10:25 this morning, Friday, and I mentioned that let's assume for a moment and play devil's advocate that the market does in fact want to go higher. It can drop down into this wick. That's this one here. Notice there is no inefficiency there. There's no old high, no support resistance, none of that garbage. Okay? It's algorithmic. The market's going to return right back to that price point. It means something to the algorithm. It's a point of reference. So the market drops down, clearing out relative equal lows. How far can it go down below those relative equal lows, Michael? To that wick is exactly what I said at the 24-minute and 5-second in Wednesday's analysis. It could go down there and then run higher to take out the buy side and go higher. Go back and listen to that video and tell me if I did not in fact say that. If I lied and I didn't say that in the video, call me out on Twitter. Everybody can see it. I don't let comments appear on my YouTube because people advertise crypto stuff and make it look like I'm doing that, and I'm not doing anything with crypto, and I'm not selling you anything. I said this. This is what analysis and 30 years experience and authorship in these concepts provide for you. That right there, it drops down just enough for the spread to engage that price. It rallies, short-term high taken, drops back down in, rips higher, institutional order flow entry drill into this buy side balance, sell side efficiency, rallies, falls short, of this high and this high. Any retracement here is just going to set up a run to take out the buy side. Any drop here is going to further increase the likelihood that retail traders are going to see that as strong resistance. So they will want to go short here if they hadn't already went short there. Where they're going to place their stop loss, where they believe it's protected and fortified behind this real strong quote unquote resistance. Well, you saw how that worked. Ripped right on through it like it's nothing. This is a knife, hot knife right through butter. So just knocking on heaven's door, and hallelujah. And here is the 5-minute chart. You're going to see a link in the comment section where you watch me engage. I go in right into the market and trade the silver bullet trade for Thursday's trading. There's a level, 42.90 and a half, that I had in mind. I wanted to see it trade up into, but I want to use my limit order just below that. And there's an inefficiency right there that I felt that was going to be impactful. So you'll see me wait for a short-term high to form, and then when that short-term highs ran out, I teach this to my students, which is running down equity. When you're approaching targets and or get 3/4 of the way to a profit objective and you're bullish, anytime you make a short-term high and you run above that short-term high, you want to be taking partials there. I don't care what Tom, Dick, or Harry says in their dollar menu mentorships. Partials always pay 100% of the time. There's never been a partial profit taken that did not pay. It always pays. So while you're learning, I teach that skill set to traders that are learning how to find consistency and to encourage them to keep studying. If you go in with, I'm only going to enter on this trade here, put my stop loss here, and I can only get out if it goes to my target, you're going to be very frustrated learning how to trade like that. So I teach a graduated understanding with liquidity and trade management that works. It works, folks. And you see me doing it many times in my trade executions. When it was with Forex, you watched me do it. Now that I'm doing index futures, you see it happening there. And when you click that link in the comment section, it'll take you to a link on Twitter, and you'll be able to watch me do a trade that I did on Thursday, which was working in this price range here. All right, here is those executions. And again, you'll watch this live. I was using a 2-minute chart to get this imbalance right here. And you can see that up here, 2-minute chart. I apologize. The other day I had the labels or whatever the titles, or not toggled on TradingView. So, just if you listen to what I'm talking about in the commentary, I'm telling you what I'm looking at in terms of the market, but sometimes the time frames are not very clear. I don't always remember to say what time frame it is, but I'm trying to do better in that area. This is a 2-minute chart. The inefficiency or gap is on the 2-minute basis. And as the market dropped down, you watch me draw this out before price drops. As it slams into it, I go and I buy. And once it trades higher, it comes back down in. What am I trading on this 5-contract addition? Pyramiding. High, low, lower low. So this is my ICT bullish breaker. If we trade above this high, which it does here and here, any retracement back down into this, I'm going to view that as a reason for the algorithm to reprice to it and go higher. It spends multiple times in it. It goes once, twice, 3 times, and then finally rips. Once it creates this short-term high here, and we drop down, as soon as we rallied above it, I took 5 contracts off above that high at 42.88, which is also inside of what? That hourly imbalance, the old one. Okay, so some of you would say, well, that's old. Why would you pick that one? Because it's in old order flow. And it's in close proximity to that 42.90.50, which is the actual swing high on the hourly chart where buy side would reside. And ultimately, I put my stop loss up here, and it came down and hit it. I let the recording go so that we can see it does in fact go to where I was looking for it to trade to, which was 42.90. That was the level I had on here, which would be 2 ticks below the 42.90.50 60-minute old high. So I'm looking for it to trade up here. I used the 42.90 level, and then I had limit orders right below and to allow for the spread to allow me to get out. And ultimately, like I said, it stopped me out. So over $10,000 in one trade, which by anybody's standards, that should be a pretty good month, let alone one trade. Somebody out there might be thinking, you know, that would be enough for me for a couple months to live on, depending on where you live. And it's not meant to then instill a sense of your trade has to be that high to be viewed as ICT, you know, acceptable. You know, any profitability is good. You know, that's your goal. So aspiring to trading to these levels, you know, a lot of you guys are out there with funded accounts. You could do this type of trade here. Give it enough time, building up your equity. This type of trade would be rather easy to put on. And, you know, it's up to you whether or not you want to get to that stage. You don't need to do this well. You don't need to trade this many contracts. If you just did one and then bought one more here and pillared it and then got out up here the same way, is there something wrong with that? No. It's probably better than your job paid for one day. So that's what I'm trying to encourage you to think like that. So with that, I'm going to wish you a very pleasant and safe weekend. I'll be quiet on Twitter. I'll be with my family. And we'll touch base with you all, Lord willing, on Monday. Until I talk to you then, be safe.